So, good day everyone. To continue our next topic, we will be discussing about factory labor. So, for factory labor, this refers to the cost of employee wages that are an integral part of and a significant portion of the total cost of the final product. So, when employees report for work, they may use electronic badges, clock cards, in and out cards to clock in. So these are just examples on how an employee report for work. Certain businesses use fingerprints while others use their own website to clock in and out, like the one shown in the picture. When employees also work on an individual job, they use time tickets. So what exactly is time ticket then? Time ticket is a form filled out by employees that reports how much time they spent on each job. Here's an example of what a time ticket looks like. So there's the time ticket number, the name of the employee, the date and station is also logged, the time started and the time ended, the total time completed, the rate, the total cost amount, and the job number. Also, the supervisor's signature is also affixed since this only shows that the worker has been supervised by its supervisor and that all information in this document is true and has already been approved. So to further understand the labor information and cost flows, here's another example of a time ticket. So in job 4521, it shows that on December 13, 2016, T. McKinney spent 6 hours working for job 71. So that's 4 plus 2 hours is equal to 6 hours times an hourly rate of $10. That would total a cost of $60. It also indicates that a total of 350 hours was spent by employees on job 71 during December. So say that this is the total number of working hours incurred in December in job 71. So the cost of that would be $3,500. So $350 hours times an hourly rate of $10, that would total a cost of $3,500. So this total direct labor cost of $3,500 is posted to the job cost sheets. So here's the total labor cost, $3,500. So likewise here in time ticket 6311, it shows that on December 26, 2016, S. Andrews spent total of 8 hours working for job 72 at an hourly rate of $15. So that's 3 plus 5 is equal to 8 hours times an hourly rate of $15. That would total a cost of $120. So a total of 500 hours was spent by employees on job 72 during December for a total cost of $7,500. So that's 500 hours times an hourly rate of $15. That would total a cost of $7,500. Again, this total cost of $7,500 is posted to the job cost sheet for job 72. So here, take note that each job number should have its corresponding job cost sheet. So why is work in process debited? So work in process refers to the raw materials, labor, and overhead costs incurred for products that are at various stages of the production process. So in this case, the work in process are considered to be a current asset on the balance sheet since the product is not yet ready to be sold. So the laborers are still working on to finish the product, thus increases the inventory. So on the other hand, why is wages payable credited? So salaries and wages payable imply that the organization owes money to its employees. So in other words, it means that the organization needs to pay its salaries and wages to its employees, and they already rendered services or work against this amount. So here's an example exercise. During March, Hatch Company accumulated 800 hours of direct labor costs on Job 101 and 600 hours on Job 102. The total direct labor was incurred at a rate of $16 per direct labor hour for Job 101 and $12 per direct labor hour for Job 102. Journalize the entry to record the flow of labor costs into production during March. In Job 101, 800 hours was accumulated times the hourly rate of $16. So 800 hours of direct labor costs times an hourly rate of $16. So that would total a cost of $12,800. In Job 102, 600 hours of job was accumulated times an hourly rate of $12 per direct labor hour. So $12 times 600 hours is equal to $7,200. So Job 101 plus Job 102, that would total a cost of $20,000. So to journalize that one, we will debit work in process $20,000 and credit wages payable $20,000. So our next topic is factory overhead. So factory overhead includes all manufacturing costs except direct materials and direct labor. Factory overhead costs come from a variety of sources, including the following. So indirect materials comes from a summary of materials requisition. For indirect labor, this comes from the salaries of production supervisors and the wages of other employees such as janitors. So for factory power, this comes from utility bills, and for factory depreciation comes from accounting department computations of depreciation. So how do we record the entry for factory overhead? To illustrate this one, Legend Guitars incurred 4,600 of overhead during December, which included 500 of indirect materials, 2,000 of indirect labor, 900 of utilities, and 1,200 of factory depreciation. So the 500 of indirect materials consisted of 200 of glue and 300 of sandpaper. So to journalize that one, we debit factory overhead 4,600. To record the materials, we will record the indirect materials, we will record that as materials 500. For the indirect labor, we will record that as wages payable 2,000. For utilities, we will record that as utilities payable amounting to 900. And for factory depreciation, we will record that as accumulated depreciation amounting to 1,200. So the note would be factory overhead incurred in production. So here's an example exercise. During March, Hatch Company incurred factory overhead costs as follows: indirect materials 800, indirect labor 3,400, utilities cost 1,600, and factory depreciation 2,500. Journalize the entry to record the factory overhead incurred during March. So to journalize this one, we debit the factory overhead, and for indirect materials, we will record that as materials 800. For indirect labor, we will record that as wages payable 3,400. For utilities cost, we will record that as utilities payable 1,600. And for factory depreciation, we will record that as accumulated depreciation amounting to 2,500. So to sum this all up, that would total a cost of 8,300. So the note would be factory overhead incurred in production. So why is factory overhead debited? So utilities expenses such as electricity, water, and communications expenses are some of the most common overhead charges in small businesses. So as these charges are incurred, the company should debit to the factory overhead account and credit to utilities payable. This is especially important for utilities charges that are billed after being incurred, such as electricity. Same goes to indirect materials. These materials are too difficult to account for. These materials are recorded as factory overhead when put into production. So once these items are brought up to the production line and used, a debit to factory overhead is made and credit in the materials account.